Hey guys, welcome to a brand new episode of What's Happening, the show where we talk about the latest happenings in the world of crypto. Crypto prices tanked yesterday after the US Federal Reserve, which is like the MES of the US, confirmed that they'll be increasing interest rates in March. Now, some of you, especially those new to investing, may be wondering, wait a minute, how and why does this affect the markets? It's a good thing you ask because I'm about to explain it. So let's dive in. Now, before we talk specifically about crypto markets, let's take a few steps back. Investors, both institutional and retail, have many choices on the table when it comes to investing their money. I say their, but if you're watching this, technically you and I are retail investors, so our money, okay? Investment choices vary in risk. Putting our money in a fixed deposit or buying government bonds are super safe, low risk, but also lower returns. On the other hand, equities, especially growth stocks, are risky and crypto is even riskier. Many factors affect market sentiment and the movement of money from high risk to low risk investments. One of these factors is interest rates. So why is the Fed increasing interest rates? That's because they're trying to get a hold of inflation. In basic terms, inflation is a general rise of prices of goods and services. Prices are determined by demand and supply. So to bring prices down, one way to do that is to constrict demand. And so by increasing interest rates, the US government is making it more expensive to borrow money, causing consumers to buy less and hence keeping prices under control. So how do interest rates affect market sentiments? The first, when interest rates are low, consumers are likely to spend because they can borrow money to buy more goods and services, such as taking car loans to buy new cars. Businesses are expected to thrive as consumers spend more, and it's also cheaper for businesses to borrow, so they too make purchases like new equipment, expansion, and so on. As such, their stock prices go up in anticipation of good future performances. And this creates a positive market sentiment as people have a positive outlook for the future. It also means that investors are generally more likely to put their money in higher risk assets, and that includes cryptocurrencies. The second, when interest rates are low, investors are less likely to put their money in interest-paying assets because their returns are going to be low as well. So investors are likely to rotate away from safer assets and are likely to move their money into higher risk investment options like stocks or crypto. And the third way, but not conclusive, when interest rates are low, people are more likely to invest on leverage, that is to invest using borrowed money. So more people are likely to invest in crypto, causing markets to go up. So on Thursday, when the Fed minutes confirmed that interest rates were going to go up, the opposite happened. Overall spending is expected to go down, safer investments are now attractive again, and fewer investors are expected to trade off leverage, causing uncertainty in the markets. So investors make investment rotations from risky assets such as crypto and stocks to safer bets, or to even hold cash in hand. Now, some of you seasoned pros will most likely say, well, stock performances and crypto performance isn't exactly correlated. And while that may be true, analysts have found that in recent times, Bitcoin has been trading in tandem with the stock market, and altcoins tend to follow Bitcoin's movement, especially when market corrections take place. And that isn't really a bad thing. The more cryptocurrencies behave like asset classes from traditional finance, the better, as they'll attract more institutional and retail investors, which is great for the space. Either way, if you and I know I certainly am certain that cryptocurrencies are here to stay, dips are always a good thing, as it provides more opportunities for new investors to enter the space. Just remember to hodl and ride the wave. Anyway, I hope this shed some light on how interest rates affect the crypto markets. Be sure to like this video, subscribe to our channel, and join our communities on Telegram and Discord. I'll see you in the next one. Bye bye.